Hey everybody, welcome back. So the most important thing is 45.63, we got over our level, and that is a big deal. And we can just see how we're just kind of going sideways for about a week and a half here. That's not my issue. Here's one of my issues, that we are way overbought here, and we can see how this is playing out. I do like this cursor. Please comment on it. All the comments have been positive. I think I'm going to keep it. It makes my life really easy. I can also draw, but I do like the ability to circle these areas and just get your attention to them. Now, more important than that is the screen should look a little different tonight, a little bigger. Apparently, if I change the resolution size, you can get it in HD. Comment below, let me know if that's true. I'm not gonna have time to rewatch this video. Sometimes I do rewatch. But what we wanna do is just focus on this. We're over that 45.63. Now we're gonna have to talk about GDP tomorrow. We're gonna have to talk about what to expect, how I'm looking at it. We're going to get into that in a moment. But right now we're looking at that 45.63. And I thought this was really poignant today. If we drill into this on the 5, and I'm going to leave this RSI up for now, because I want to just get into this where we're overbought, and then look at how you act. Look how we pull back, oversold, and then we work off the oversold. I mean, that's very attractive from a trading perspective. Like, this provided a tremendous amount of opportunity and is exactly what we're looking for. And it's really hard to look at this and not like what you're seeing, but you have this area right in here, this 45.63 area, and you keep bonking your head. You have a lot of earnings out tonight too that we really have to go over. And a favorite is up about 20% after hours. We're going to have to talk about that as well. But if you see how we're holding in here, we're holding in here very, very nicely. I don't see any reason to assume that that is going to change or that we have to act on it. But we do have to be cognizant of the fact that we have moved very far in a very fast pace. You can see that, got back through the overbought, back to neutral, overbought, selling down. This is somewhat of a negative divergence, but you're still hanging in there, and you've worked off that negative divergence by resetting back at the neutral line. So we still have that going for us, but with the GDP tomorrow, we really have to be careful up here. If you look at the NQ, that looks a little bit better, where we've undercut, tried to bounce, undercut again, and rallied. And you've broken that DTL right here, and I'm sure you see that downward trend line already. I'm sure you guys already saw this, but we'll just pop it in. So you already broke that. And obviously this determines the magnitude of the move. You're setting up to lift, and that divergence usually precedes what happens up here. Not always, but I want to stick with the 4-hour, and you can see how we're looking in here. It's going to lean on GDP tomorrow off the open. I mean, it's really going to be that simple, and we're going to dive into that number in a moment here. But if you look at how we're doing on the small caps, you're just trapped. But it's not just the small caps that are trapped. It's very specific small caps. So if you take a look at like ARK's been on fire. I'm just going to leave it on a 4-hour here. You're lifting up. We could attribute this to Coin and a lot of the other names that she's in, but she's on fire. We bought this in the 40s, and we're doing considerably well with it, and I think that will continue. Now, overall, I do have some trades to show you, some live trades. I think with all the data that I want to go through tonight, I'm going to save it for tomorrow. There's a way that you can actually buy into VWAP. We did it in the trading community today. And the last amount of wait lists will go out tomorrow for 24 hours. In other words, we'll be open 24 hours to sign up for the room, and then it'll be closed for the rest of the year to enrollment. So that'll go out, but that'll go out tomorrow night, just FYI for those that haven't received it yet this week. And then we're done. Because I talk to everybody when they enter the room or give them the opportunity to. So I have to go through that, and then I have to prepare for the rest of December, which is going to be a wild month of trading. I can just say it. So, but if you take a look at ARK, I mean, this has been on a tear. That's because of Coin, but the small cap names, they're moving. These small cap names are moving. We're not seeing that in the regionals, are we? We're not. So we have to be cognizant of what's going on out there, and that's what we're seing right now. The dollar is going to dollar. It's just going to fall apart, right? This is exactly what we want to see. I said we were going to get to parity sometime next year. We might be at parity by the end of the week if this keeps up. I don't think we're going to be at parity by the end of the week, but I do think that we have the potential to get there in the next couple months for that to drop and for us to get to parity. And we'll see if we do or not. But even the auction today started off at the 7-year auction. That's when the market spiked. I think everybody saw the spike in the VIX. You have those people out there that are saying the VIX is dead, the VIX is dead. It didn't feel dead today for people, that's for sure. When this happened, all of a sudden the VIX worked again. So maybe the VIX has always worked and people just don't like what it's doing. Have you ever thought of that? I know I think of that. So here we are with TNX and the 10-year. I'm going to leave it in line form for a second and just see what happened. We just took out a lower low. Sometimes line form just makes life so much easier, right? Sometimes it's just good to take a step back and just look at what's actually going on and get rid of all the noise and look at things simplistically. But what's happening there? You're completely just buying the living heck out of bonds. I mean, look at TLT today. This is something that we bought off that November 1st move, I think 84, 85. We've absolutely slaughtered it in this trade in the community, and we're still in it, and I don't really plan on selling it. You're seeing more inflows go into HYG. Look at that breaking out today. The reason, and please listen to this statement, the reason that the bond auctions are weak on the Treasury is because there's better yield out there. One of the things we went over on Saturday's video and was in the free newsletter. If you don't get it, link in description, get the free newsletter. One of the things you need to pay attention to is inflows are going where? They're going into high yield bonds. They are going into investment grade bonds. Okay, they are not just going into the tail that wags the long end of the tail, which I always refer to as the dragon's tail, but I kind of messed it up when I said it there, and I'm not going to redo it. And I'm certainly not going to edit it. Got way too much to go over here. But you see where I'm going with this? Look, what's breaking out? High yield's breaking out, HYG. That's what people always say, let me know when it's time to start buying, bonds again. Well, ding, ding, there it is. And you can see that what's happening here. And look at the investment grade side. I mean, they're on a tear, so we're doing exceptionally well with these trades. There's very little to do. Next, what's going to come into play is going to be Utes, 2 Utes. Anyone remember that movie? Put it below in comments. And a what? A Ute. So what you're seeing here with the utilities is how it's acting, trying to get over that control bar. These things are going to be on a tear. People are going to go start chasing yield. Speaking of chasing yield, into the end of the year, you're going to want to start looking at XLRE and what's happening there. We start overlaying everything here and how this is playing out. You're going to start seeing some fan favorites. SLG doing what? Closing above the 55. I use a 12, a 22, and a 55. I have so many names to go over and so much information to go over. Before we even go down that road, we need to talk about GDP and what's going to happen. Now, on this graph right here, October 26th is where GDP came out. And GDP was higher than expected. Some of you may remember that. Now, up here, you can see where it says consensus forecast and what the previous was and what we're expecting. So if we're looking at Wednesday, 8:30, the growth rate previous was 2.1, consensus is 5%, 4.9. You can see what we're expecting, where we were previously, and that they are expecting a much higher number. Now, if you take a look at this, going through corporate profits, you always want to look at this stuff, but sales, 3.5% is what consensus is, and then this is the forecast, and this is what's previous. So they are expecting something else to come out. Now, it's worth mentioning that the next day we have PCE that comes out. But overall, we need to pay attention to this because last time this came out, as you can see, we did not get what we expected. So is there a way to look at what's going to happen this time and get an understanding of where we are? Well, there's a couple different ways to do that. In front of us is the financial condition index. And when it's going up, what it's telling us is, it's telling us that when we're going up that, hey, by the way, things are getting a little tighter out there. It's harder to borrow money. You can see right here where we were, and now you can see where we were over here in the period of time. And this is when we were dealing with that GDP. Then we can see how conditions are actually getting better. So conditions are getting better, and then people will say, well, that's good, right? It is good, but it also means that the economy is going to heat up. Why? Because conditions are good or better. You can go out there, you can borrow money, things along those lines. We're also seeing the cost of goods go down, which actually will heat up the economy. And we're going to talk about that in a moment and how that's going to come into play. But financial conditions in and of themselves are easing. So in other words, when you're dropping down, you are easing. So when we are dropping down, we are easing. And what we want to know about this is simple. That just means that the economy is going to pick up, and which would be a good thing if we weren't worried about inflation. If we find ourselves in a position where financial conditions are tightening, well, that just means if we're tightening and this is going up, then that's going to put us in a different position where GDP could come in lower. Bear with me. I'm trying out this new tool. I'm not really sure how I feel about it yet. It seems a little wonky, but you can comment on it below. Also comment on the photo. Let me know if the picture's better today. I was told to change the resolution a certain way, which makes the picture a little bit bigger, but then they said that then it could totally be in high def. Just let me know if the picture's different and how bad this writing tool is, because I'm not really a fan, but your comments are always appreciated. So that is the concern that I have. Now, there's two other concerns. Now, if you've been a fan of the channel for some time, you know that what we like to do is just mark where these days are so we can see where CPI or PPI, if it's going to come in hot or cold. And what do we mean by that? If you see what's going on with oil, 2/3 of our economy is controlled by oil and gasoline. If you take a look at that and it's down down, you can usually determine if CPI is going to be weaker than expected or better than expected. It's a back of envelope way to do this. I know people will say it's only so much of our economy. I'm not saying it's the entire economy. What I'm saying is, at the end of the day, that the majority of things that we use are driven by oil, whether or not it even rent, everything, delivery of goods for rental places, everything is one way or another, oil or gas. So if we see it come in, it's usually 2/3 of GDP, frankly, is affected by it. So if we see this and we see this coming down, okay, well, while this was coming down in October, which is going to be reflective for us, well, this is going to be an issue. It's not going to be this, it's going to be this. So we know that we're dropping in October, right? We know this. Okay, so we know that October dropped, and that dropped 9%. So we're fully aware of that. And that's why we could see PCE being good. But also, if we were to take the 30th, to where we are now, and it doesn't work that way, but just to put it in perspective, you're down again in crude. All right, so now crude's down again, which would do what? Which would make easing of everything a little bit easier. Financial conditions index, right? So let's go to RBOB, click here, and take a look at gasoline futures. And again, what are we going to notice here? Well, we're going to notice a significant drop. And we're just going to note that from, let's just take the second, it doesn't really matter, it's one day. And what we're going to do is just go here to November, and you're going to see that there would be a drop. We can even go here to the, where is it? There it is. Okay, so we're going to do the second anyway. And you come here and you'll see that we are down 8%. All right, so then you come here and say, okay, well, from here to now, and it doesn't work that way, but you're still down, okay? Why am I showing you that and at the same time saying it doesn't matter? Because it's going to matter to the person that's been going to the pump. It's going to matter to the delivery driver. All this is going to matter. So what do we have? We have an overheated GDP from last month, and we can't, I mean, that's irrefutable. So that was overheated. Okay. And what did that do? That knocked us down and knocked the wind out of us until what happened? What happened the next day when they came in? All right. So we have PCE the next day. There's actually two things that we're going to do here. But what we're going to focus on tonight is we're just going to focus on one thing. That one thing that we're going to focus on, that is going to be the GDP and understanding that it could come in possibly hot tomorrow. You never know how it's going to come in. But the way that this is shaping up, and that could add pressure off the open. Doesn't mean that you have to get out of your positions, anything like that. It just means you want to be aware of it and understand that 8:30 is significant tomorrow. And this is what happened last time. This is where we are at the top of the chart. We are significantly more vulnerable up here than we were down here. This has a really very strong Goldilocks situation that's going on right now that, quite frankly, doesn't really exist in the same format where we think everything's rosy. So we're going to want to watch this, and we're going to want to watch this very closely. Also, it's worth noting that at the same time, when this GDP came out, we were already oversold. So that made things a little easier for us, meaning we didn't really have that far to drop versus you're looking at where you are now, and we are not grossly, but we're significantly overbought. I don't think anyone would doubt that. So that's what we're going into tomorrow, and that's what I would personally tend to focus on. So keep that in mind. I think it makes sense for us to focus on the GDP tomorrow at 8:30. We'll be live for it so that you can watch along with us. I will make sure that we are live before it comes out. Sometimes we start a little late. I'll make sure it doesn't happen tomorrow. And just be cognizant that we could see something like this. It could be a knee-jerk reaction. Now, I hope that was helpful and that you give you an understanding of how I'm looking for this to play out tomorrow. Ton of names to get through. First, let's talk about the stocks. We are over the 70 and we're starting to roll back. We are holding the 12 and we're trying to hold in here, but we're starting to lose some of the guys. So we're starting to lose NVIDIA under the 12 bear flag. Full disclosure, 3 times tried to short, 3 times did not work well. My best trade on it, candidly, if you would look at it today, was actually a long that I scalped. And came out when the CEO came out and said, oh, we have a new chip, and real simple trade. But all I was doing was just playing this level all day long. And you can see that level right in here. It's not rocket science, but I was just playing it right in here. And for time's sake, I'll show some live trades tomorrow that I did. But you can see how we're acting right in this range and how things are going. And I think it's going to crack. I mean, I'm just going to be blunt here. I think this cracks. I have no idea if it cracks. It's going to be dependent upon what happens tomorrow with GDP. I really do. I think you're going to have a high number. I think I made that pretty clear there. It doesn't mean that we are. Guys, it doesn't mean that we are. Understand that this data can be extremely, I said it 3 times on purpose, manipulated. So I don't know what we're going to come in at. And it's not just this administration, so don't, there's no need to comment on that. It's every administration. So But if you look at this, I mean, to me, this just looks like it's just going to completely implode. So I don't know how the stocks is going to hold. We're looking for that new leader. Is it cloud? Some of these cloud names look like beasts, but at the same time, I'm looking at cloud. ZS, we had a really great trade in today. It's one of the trades I'm going to walk you through tomorrow. But ZS, we had a really great trade in today. And you're seeing this where you completely implode, scare everyone out of their hopes and dreams, shatter their options, and then they come in and they buy it at the end of the day. That's a Marubozu black or white actually sitting at the top of that chart. That's a pretty strong bar, and usually that bar has follow through, just FYI. Again, you're going to have to see it replay out tomorrow, but let's talk about this. Does anyone see a pattern on what's going on here? This is when earnings came out here, and all it's done is gone straight up since earnings. Now, I personally think from where we're at and what we see going on that maybe we're getting a little frothy in here because all of a sudden it's the Affirms of the world that are breaking out and running, right? It's not like just Netflix and the whole sector breaking out. It's the Rukus of the world. But are we rotating? In other words, are they rotating and looking for the next name, or is the market getting frothy? I think you have to take both sides of this, and I think you have to take a look at where we are. We're pretty high up there in regards to the RSI and overbought by any metric. And the breadth is not getting better right now for the past 2 days. It was, and now it's not. Do we really want to be buying coin that's just going up $8 a day? Does that make sense? Did the company get that much better? Usually there's at least a handle. I prefer a handle and then kind of go from there. What I want, what I'm going to get are two different things. And I like this name, don't get me wrong. We're trading it today. One of the things that you're seeing a lot of is this. We've been talking about these pullbacks, and a bunch of people were doing this and wanted to be in it. And we got the nice gap fill down, then comes over, you get your little reversal bar, and then you go. And you're seeing, we're seeing a lot of these reversals. This was another one we had a great trade in, like a really nice trade in. It worked out perfectly. But look at this on earnings. They come down, they smash everyone's hopes and dreams, and then they just rip it. That kind of behavior tells you one thing. They're looking for stock. So as I'm saying, I think GDP might be weak. Tomorrow I'm going to tell you that I think PCE or GDP is going to be hot, which is going to make equity markets weak. Tomorrow night I'm going to explain to you that I think PCE is going to come in weak, and that might bolster the equity markets. So you're really in this wonky period of time, and the whole time you're overbought. But every time that we look like we're going to crack, that's not what's happening. Now, even take a look at Tesla, and we're going to be asked about this a myriad of times. You're bidding up $2. And if GDP wasn't tomorrow, I would have a pretty decent sized position in this, but I would rather wait till 8:30, see the number. And then as soon as you see the number, it's so liquid, you can just put it right back on. Maybe you pay up a little bit. Who cares? But you're right above that 55. So this is really hard to not want to be involved in right now. Very hard for me to not want to take a position in that. I had a nice trade in this today. I was just picking at it all day long. It broke this one DTL I was looking at. That's actually right here. And you can see it right here. I'll show it real quick. And once we started breaking that, and you could just see that that was pretty much it. And I'll just pop it in very quickly so you can see. But we have so much to go through. Once you started getting through these levels and you start breaking out, I mean, that was pretty much it. You should be able to see it right here. I can zoom in. And there's another one right here too. But that was pretty much it. It was just perfect. And they just played out perfectly all day long. The question really now is, what is GDP going to be? Earnings are coming in. The earnings are, in my opinion, they are mixed. And I think that that's how you need to look at it. You need to accept that they're mixed. And I'll give you a great example. So here's a name that people won't even look at tomorrow. So this is one of Goldman's top names for solar of all things. And you can see how you're breaking out here and you're setting up. They absolutely crushed tonight. All right. And then you have a mixed, to me, you have a mixed bag. So you look at Crowd, which everybody loved and was supposed to be great. They didn't give the best guidance, guys. Now, how does that act tomorrow? I'm not sure. But then you go look at Workday. Workday absolutely crushed. Absolutely crushed. Had buying after hours and looks exceptional. NTAP looks exceptional. Okay, these names are all setting up, and look at this after hours. It was a perfect trade. And that's what I'm saying. Some of these things, they're so perfect right now. It's almost, maybe it's just me and how I feel when I see these, but one of the things that we like to do in the community, one of the things I always suggest that you do is you take the first bar and you just measure the first 50% line and you see how you act there. And usually if you hold that, flip it, and then you don't retest it, you're usually in pretty good shape. In this case, it would have got you in around 83 bucks. You might want to rewatch what I just said there and see how it acts. And then, of course, the other thing that we tend to do, and I would suggest that you do, is we overlay an anchored VWAP on the after hours bar. That's where you lay the anchored VWAP. Anyone that tells you differently is using it wrong, in my opinion, especially for earnings. So once you see that, you get a sense of where all the players are after hours. And that's even like I shorted crowd after hours. One of the reasons I did was just right here. And, let me show you that. So I just want to show right here that you see the timestamp there, crowd short. And then you can see I was up $4 in the short, covered it. And then we're also in this GME, which I'm going to cover in a minute as well. But all I was doing was shorting it. And then all I did was use a very simple stop. And I'm going to walk you through exactly what I did so you can do it too. You can see how you just were unable to get above. Once we started closing above the anchored VWAP and it becomes resistance, becomes what? Support. I just closed the rest of it. I took what I made and that was enough and I got out of the way. You have to be careful on conference calls, guys. You just never know. Life's like a box of chocolates. You never know what you're going to get. But some of these names look exceptional. This NTAP after hours just looks like a beast. And we should probably just get to it. GME of all names I'm going to talk about. I have a position. Now, I was real fortunate today, and comment below on this. And I did get an email from somebody from sharing this video. So I just want to say this. I really appreciate when you guys share these videos. And what it does is it eats away at the fact that I don't run ads in the middle of these. And by not running ads means that you just get content. And I really don't want to do it, but the algo picks it up. So the more you share, they actually check that link. I don't know how they do it, but those internets, I have no idea how they work, but they check the link and see how it works. And I think it's pretty fascinating, whatever. Anyway, thank you for sharing and thank you for your comments. They are greatly appreciated. Thank you for reaching out and telling me how these videos are shaping your trading and changing your life. It's exactly why I do this, to present actual data to show people what they should be doing to be truly successful at trading instead of, showing you my leased Lamborghini or whatever the kids are showing on nowadays. But see where you're at right here? Look how you're getting over that 55 on GameStop. When was the last time you were there on GameStop? You haven't been there since back here. So what I did here, and let me know if you want me to walk through this. I'll do it on Saturday. I'll have the time. But when I traded up, I just married puts right behind it. The puts were so cheap because everybody's so crazy about buying the calls. Here's the problem with the calls, and I just want you to wrap your head around this. Let's say that this went to $50 this evening. Let's just say, devil's advocate, this goes to 50 bucks. Okay. How are you getting out? Especially if they stop you from shorting and say, oh, you can't short after hours. How are you getting out? I know how I'm getting out. I have stock. And I married puts to it. So I know exactly how I'm getting out of my position. That's a huge distinction. And this is from someone that was a registered options principal that's telling you that it makes a huge, huge difference in your trading. I would watch this tomorrow. I would watch this level very, very carefully. Candidly, this wasn't even my idea in the room. This is why I love the community so much. Someone else brought the chart up to my attention, and it met all this criteria like immediately. So obviously I have criteria. And when something like this met it, I was really kind of surprised, but it did. I'd rather trade and not judge it and just go from there. But I would wrap your head around one thing that you'll see a lot of people say, oh, buy calls, you're going to make so much money. Depends on the size of your account. But if you can afford it, the real move is to buy stock. And then after you buy stock, marry puts to it. Now I married out past this date. So I'm past the 8th on my call or on my puts. So that allows me, I can stay in the trade to December 8th. And let's say that it goes up tomorrow. I just lose money on those puts, sell them, whatever I can get, and just move the puts up. Either way, I'm going to lock in a profit. That's it.